Hi everyone, welcome to week 2. Welcome back. If I didn't scare you off in the first week, I'm glad you're back and sticking around. So this week we have the hotel business. We're going to get into that a little bit. Again, we're giving you the overview, but it's good stuff for you to have because we'll build on it throughout the semester. Watch this video, obviously. There's the PowerPoint voiceovers, and again, I think I recorded those almost a year ago, so they're probably pretty rough, but you'll get the hang of it. Read the chapter, that's chapter 2 on the hotel business, and watch that Cesar Ritz video. It's a very good video. The YouTube link is in your syllabus. And then comment on discussion board question. If you were going into the lodging sector as a career, what type of property would you prefer to work at and why? I will chime in on some of those depending on what you say and what you have to offer to the discussion. And speaking of, I have made it through most of your introductions. Some of them I had to send back because it was improper grammar. It was like you were texting it to me and using all the misspelled words, capitalization, those kind of things. If I see that, I'm going to send it back because you need to present yourself very well. And what I like to tell students and people that I mentor is everything you say can reflect and does reflect on you as a brand, your personal brand. So it's important that you communicate properly and use proper grammar and spell check. We all make mistakes, but if I see it, I'm sending it back. So let's up your game a little bit. And I only did that for a few people. Most of y'all have did a pretty good job of getting me your introduction, and I commented on most of them, I believe. But if I have not gotten back to you on it, I will soon. I'll get caught up on that. I have 131 students this semester, and so I want to try to get around to knowing all of you. So anyhow, another couple of things that I wanted to throw at you. I read Skift, which is a kind of a clipping service of news in the hospitality business. And they publish a market report, and this is pretty important. For the week ending January 15th, U.S. weekly hotel occupancy worsened in comparison to pre-pandemic levels. Now, when you're going through the hotel section, there is a report that we look at. It's called STAR Report, Smith Travel Research. We rely on this for judging market performance, highs and lows. A lot of these companies, like the one that I'm referencing here, will use that information, the latest data, to let us know what's going on. And for example, for the week 9 to 15 January 2022, and they compared it to 2019. I think the industry has pretty much thrown out 2020 because there was so many anomalies and so many issues that affected the hotel business. But here it is. Occupancy was 48.8, which is down 16.3%. Average daily rate, or what we call ADR, you'll learn about that this week, and the US was $122.12, only down 1.6%. And the RevPAR, revenue per available room, in the United States is 59.57, down 17.6%. So we're seeing some moves down, but San Francisco experienced the largest occupancy decrease, over 53%, almost 54% decrease from 2019 levels. That's huge. But Miami registered the largest ADR increase at 16.6%, which is around $271 per room night. That's pretty healthy. And that market is pretty healthy as well. So let's see if there's anything else I wanted to point out in here. No, that's about it. But we're getting back to levels pre-19. That's important to understand, or pre-pandemic and back in 2019. So there's that one. Now, another measure that I follow is how much money is being spent on updates and building new hotels and building new properties and selling new properties. It's a real estate measure. And they continue, according to this, now this is a Cornell Hotel Indices for the fourth quarter of 2021. Basically, it's the hotel deal. I'll read it for you. Hotel deals continue to look profitable based on our economic value added, EVA, and shareholder value added, SVA metrics. Looking towards the next quarter, our leading indicators of hotel price performance indicate that we should expect slower or declining price momentum for the larger hotels, but positive price gains for smaller hotels. So we're seeing these larger, more capital intensive hotel properties. The interest in that is dropping a little bit, and we're forecasted to see the smaller, more boutique hotels increase. Now the question is, does that reflect the consumer, or does that reflect the financial markets and their willingness to get back into this, this sector, the hotel sector or the lodging sector? So there's a couple of things I wanted to pass on to you that are relevant for this week. If you have any questions, please let me know. You've also got that quiz. By the way, the quiz, it is 50 points, but it's only 10 questions. And I may have thrown in a couple of other questions there. It will cover Caesar Ritz. It will cover this video and everything that's in the videos and in the written material in the chapter. So again, it's 10 questions. It's open book and open notebook. So feel free to use that. I'm not trying to trick you up, okay? So have a great week. If you have any questions, please reach out to me. Some of you already have, and I thank you very much for that. So take care. Have a great week.